Switzerland has a highly successful market economy where the government encourages free and fair competition between privately owned companies. While the United States encourages the same, it is considered a mixed economy due to stronger regulatory oversight guiding the public sector. While the total GNI per capita in Switzerland is $86,000 compared to the U.S. at $53,000, the Swiss cost of living is exceptionally higher. When adjusted for purchasing power parity, we discover that the GNI per capita is $56,000, still exceeding the U.S. by a wide margin, not only dollar for dollar, but also with growth rate over time. Let's quickly put that into perspective with a few common goods. As you'll see from the chart, at almost 50% more in cost, that's a whopper of a price to pay for a Happy Meal. You'll notice a significant crossover of positions between 2009 and 2010. This was in response to the 2008 financial global crisis. While the United States government responded with increased taxes and regulatory burdens that arguably turned out to be ineffective, Switzerland introduced a zero-rate interest policy to boost their economy as well as prevent appreciation of the franc. They in turn began to recover in 2010. Since then, they have gradually increased their score with notable successes in rule of law, open markets, and regulatory efficiency. And today, they rate as a completely free nation. While both countries show continuing efforts, Switzerland shows a consistently higher degree of progress towards increasing their HDI. The United States is ranked number 8, while Switzerland is number 3, showing only a higher score in life expectancy. This is due to rampant health issues more prevalent in the United States. Both countries show higher FDI outflows than inflows between 2001 and 2015. In 2014, the U.S. fell from its top-notch position as the preferred investment site to number 3 behind China because of increased competition and concentration on developing countries. Despite this contraction, both are also showing a sharp increase of inflow investment for this past year. The Swiss franc has a worldwide reputation for being a safe haven for its stability, while its euro sibling has historically been a weaker currency. The Swiss franc has a reputation for being a safe haven for its stability. In 2009, the Swiss National Bank put a cap on the currency to keep the franc from getting too strong. This turned out to be a costly decision financially for exporters such as Nestle. In 2015, Switzerland scrapped the cap on its currency against the euro, and the franc then jumped an unprecedented 30%, causing ripples for economies across the world. This turbulence seemed to be the end of the reputation for stability of the Swiss franc that it's still trying to recover from. This year, Switzerland's overall trade surplus showed a 2% rise in exports to their top 3 destinations. Even while the outbound demand for watches, vehicles, and jewelry significantly dropped, gems stayed at the top of the list. The surplus was attributed to an increase driven by pharmaceutical products and machinery to Germany and the United Kingdom. In the U.S., the trade gap increased, marking a shortfall of market expectations. Exports fell 2% due to lower than expected shipments of civilian aircraft, while imports rose 1.1% and reached the highest level in 15 months.